All right, so as promised, I've got a great interview for you guys here today. This, of course, is Jean-Marie Monetti, who is the CEO and co-founder of CoinShares. Great to have you, Jean-Marie. How are you?
Good. Thank you for having me, Paul.
So this will be good because we're going to dive into a little bit about your strategy in general around the U.S. listing, what you guys have done here, and what's different about it in terms of the strategic transition that you guys are in the middle of. Talk to me a little bit about what you pulled off around this SPAC merger.
Yeah. So if we wind back the clock a little bit, we listed CoinShare in 2021. So most of the people use a SPAC to get listed. We really use a SPAC to go American.
Right.
And so if you wind back the clock, the listing has been very successful for CoinShare from a regulatory standpoint and from a transparency standpoint, but didn't really allow us to effectively capitalize on what a listing is useful for, i.e., having a good equity currency, so as you
Hmm.
can use that for creating value for your shareholder. And that's due to several attributes to the Swedish market and the fact that we also foreign in Sweden.
Right.
And so the idea was like, how do we get ourselves outside of Sweden and maximize value for our shareholder under a certain number of constraints? One
Hmm.
of them being we don't want to keep a Swedish listing. We want to be able to have just one single point of listing in the US. And so, doing that was addressing liquidity concern, free float concern, and so on. We effectively look at many options, and the obvious one at the end was and the obvious one and the only side which work is we have to do a reverse takeover.
Yeah.
And the reverse takeover into an existing shell give you effectively dilution for intangible value, plus legal risk versus how the business has been run before, and something which is not exactly ideal. And so when we look really at what we did effectively a reverse takeover into a clean shell with a bit of cash, and at that point, effectively, this is
Hmm.
also called a SPAC. And so we are, normally CoinShare is really the SPAC anomaly. People who normally used to, if you look at 2024 data, there's probably two company only who went public through a SPAC with more than 25 million of EBITDA. So CoinShare is among this kind of anomaly, and so we that allowed us to create a beauty parade process where we went to all the SPAC provider and effectively get them to create a massive RFP against us. And we decided to go with the best people for our case, which was maximizing the value for our shareholder in terms of dilutive impact.
Okay, so well, there's a lot to unpack there because I think
Mhm.
from a timing standpoint, the regulatory tailwinds right now that are playing within the Genius Act. Obviously, we see market structure that's about ready to happen. All of this, was this planned all along, or was this something that you guys just saw this in the pipeline and this made good sense for your strategy overall?
No, it's it looks like it has been planned yesterday. The
Yeah.
reality is like we had almost a reverse takeover proposal on the table in September last year
Ah, okay.
with a proper legacy business, and when we saw the kind of string attached to the legal risk and the historical legal risk, we kind of like put that on pause and rethink the plan. And as we rethink the plan with our bankers, we effectively figure out, as early January that the SPAC route was probably the best route for us in that instance, and then started the kind of long process to figure out how to make it work properly. Because you have like everything in life, you have all type of quality of SPAC, you have all kind of quality of player in the SPAC market. So it was kind of a position to be well accompanied in this process, and our bankers at Stifel did a fantastic job to
Right.
help us navigate that.
I was looking at your 2024 annual report, and if you look at that on EBITDA, the earnings comparison on at least on the enterprise value,
Mhm.
it was like a 7x, and that's pretty typical. But we've seen peers of yours in the market right now at 20x on EBITDA valuations. Do you think this listing is going to provide a solution for this undervaluation?
I think a listing in itself is not a solution. A listing is a mean to an end. At the end of the day, CoinShare need to keep executing. The company has been well known over the years for executing the plan. CoinShare is not in control of the market sentiment and what the market wants to do of CoinShare stock. So we will keep executing as best as we can as usual. and then we will make sure the market can do its effectively job of pricing CoinShare at what should be a fair value for CoinShare.
Yeah. Okay. So in terms of the product lineup that will
Mhm.
be at CoinShares, you guys obviously had an early leadership position on the XRP ETF filings, Litecoin as well. Those were through, I guess that was October
Mhm.
was it, when did you guys file
Yeah.
for that on your S1?
Earlier this year, yeah.
Okay. All right.
Mm.
So I'm kind of curious when you look at going from 4 products in 2021, now you've got 30 plus products across a variety of platforms. Do you see certain digital assets that you're going to prioritize around the ETF products?
Yeah, so it's a question of like differentiating Europe and the US to start with. Like Europe has been at it since 2014, doing some
Right.
single coin ETF and so on. So, we have been very good at doing it in Europe for 10 years. And realistically, when you come to the US today, the US market looks a very, very different market in terms of maturity and where we are in the journey and the all investable story. And so, you need not to get confused to think that we're going to have our US journey as just a simple repeat of what our European journey has been. CoinShare has been very good at innovating over the years. We were the first one to launch the ETF in Europe. It was launched at the same time as Grayscale in the US. So just for comparison, was the first one to launch basket, the first one to launch
Right.
indices, the
Right.
first one to create staking within ETF. So all this kind of stuff are kind of like innovation CoinShare brought to the traditional financial market in Europe. So all this debate which is happening in the US right now, we already fixed it long time ago in the US. So we're kind of like looking forward because all that is kind of commoditizing to some degree in the US very fast. So, we have no interest in competing with the giant of the US. The US is a fantastic access market. There is massive player in the US, and we have no place to compete with them. They are on this market. So the real question for CoinShare is like, how do we differentiate ourselves? How do we keep bringing product which are effectively servicing client and bringing high added value to client? Back in 2014, having a Bitcoin ETF was a high value added to client. Today is becoming an access product. So
Yeah.
the real question is like, how do we keep building product which have a high value embedded into them to service our client and to differentiate ourselves and build our franchise in the US?
What do you feel is the differentiation though right now? When let's assume, everything goes through, or we're here in the United States, you've got a full listing. Now investment advisors can start to work with you. We see high net worth individuals starting to move in. What would be the reason I would go with CoinShares?
Well, to some degree, and the CoinShare is not only in this mix, but first and foremost, there is a question of like when you get a heart problem, you go not to your GP, you go to your heart surgeon, and you go to your cardiologist to understand exactly what you have, because your GP is going to tell you take some aspirin. So at that point, you really need to be able to figure out that you want to go not with a supermarket of asset management, but with something
Right.
which is specialized in digital asset,
Okay.
because people are commoditizing digital asset today, but it's remained a very technical domain of expertise. You just need to look at this old debate right now around the staking queue around Ethereum, where all the traditional players are kind of like wondering how do we get this kind of stuff, kind of exploding in our hands or preventing it from exploding in our hands from our reputational point of view. While this queue is very manageable, it's a question of like how do you end up managing
Yeah.
your staking line effectively.
Okay, Jean-Marie, when you look at the macro environment right now, obviously we've seen here recently with the FOMC, Chair Powell getting a little bit more confident in the sense that they're going to have to cut more times. This, of course, is going to get into this whole idea around QE, which would be, beneficial for digital assets. The micro side of it, do you feel like this is the cycle or the phase in this market currently? Because we've got gold all-time high, S&P all-time high, that this is going to be good for an environment for investors coming into crypto for the first time. Do you feel like this is the time to do it?
Look, there is a saying in crypto which is a very old saying, and I can't give the author of the quote because I think we lost the author of this quote uh, because it has been quoted so many times. But the saying goes by, "Everybody discover crypto at the price it deserve."
Yeah.
And effectively, there is never a good price. There is just a price, and the price is the one you discover crypto. So is it a good idea to buy Bitcoin today versus buying it 10 years ago? Well, you can't retrade, and the benefit of insight doesn't help you. So, added Bitcoin to your portfolio, adding digital asset to your overall portfolio dramatically improves the risk reward profile of your portfolio. So it's not even a question of like, should I? Is you had to. It's just like the math
Right.
don't lie, and the math are showing you the benefits of it. Now it's a question of how do you dose that, and it's a question of not going all in. It's a question of like how do you adjust that allocation to the needs you have and to the kind of environment you are in. Some people go 100% crypto, and that's kind of a escape of the natural of the traditional world. And some people just start, sprinkling a bit of crypto into their retirement account. We went into
Right.
crypto originally to start sprinkling a bit of financial freedom. That's how we define it in the beginning with my partner Danny Masters. Was like we want to make some of these people benefit from this financial freedom Bitcoin can create and give them access to it. And so, there is no bad price or good price. There is just a price. And if you believe in the long-term journey, you believe in it because it's your retirement plan allocation and not just a trade you want to do for the next 2 or 3 months, then
Sure.
just take the price and forget about it.
What about, okay, so obviously Bitcoin early to the market in terms of the ETF. Ethereum right behind it has had fantastic inflows for an ETF that size. The likelihood is we're going to see an XRP ETF coming in, Solana, maybe even Avalanche, Hedera, etc. You look
I
at the
think I think I
basket of
think you see
these
Solana first, by the way, Paul.
Solana first.
I think you see Solana first before XRP. That's my
That's your
personal
theory.
guess.
Okay, all right. I like that. I like the
But I
consistency.
think you mentioned the formidable inflow into Ethereum. I think
Yes.
what's really happened is like over the summer, somehow the penny dropped. People are we've been on the road for decades now talking about the virtue of Ethereum, the virtue of blockchain, how
Yep.
things are working, and people are always telling me, "Oh yeah, I understand blockchain, but I want blockchain without the token." Or I understand the technology, but I don't like these token bits. And like all of a sudden, you get a fantastic application, basically the stablecoin application, which get passed effectively in a legislative format through the U.S. Administration. And all of a sudden, people are realizing, wait a second, now we have a stablecoin bill. This stablecoin bill needs some rails. These rails are called a blockchain. So which one is winning? And all of a sudden, Ethereum is kind of the winner on that sense over
Right.
the summer rally because people are just jumping in it because that's the only stuff they can allocate to.
Yeah,
And you
exactly.
see, from a traditional finance allocation perspective, you can't buy, you can't buy Solana as an ETF today in the US or except with some smaller providers. So Ethereum was a natural winner, but all of a sudden people realize that okay, wait, if we believe what the administration is saying about how stablecoin are transforming the world and how we're going to have a beautiful bill in the US around that, and further down the road a market infrastructure bill, well, some of this blockchain going to win. So we need to pick a winner. And you see the declaration from Larry Fink. You hear the declaration from different kind of key opinion leader around blockchain, and so everybody piled into Ethereum as a kind of a crowded trade next to Bitcoin, effectively.
Yeah. Well, I mean, you've got also, I think, the exposure of ETH has been magnified by what's happening in these digital asset treasury companies, with Tom Lee becoming the poster child of that. So, awareness has started to open up, which makes people think, all right, well, what's the alpha play here? Is it the DAT or is it the ETF? For at least for when it comes to Ethereum. Now, if you look at this with Solana, you look at it with XRP, my question is, we have a massive retail trader group in the US, and also if you look at Korea and some of the Asian markets that kind of flow to both of those assets. And I'm kind of curious, do you think it will be Solana that outperforms early, or do you think XRP, because of its retail roots, will do well on the ETF market?
I think if you look at the DAT allocation for Solana, the most recent one, notably the forward venture one, the amount of money which has been raised through that is for Solana is phenomenal.
Yep.
So I think you're going to get, and that was not a foundation, a foundation kind of propelled effectively raise. It was a real kind of raise from external money. So it was a very interesting success for Solana. I think Solana has been kind of underperforming compared to Ethereum or even compared to it to Ripple recently. So I think Solana has a lot of gas in the tank left. And if you get a proper Ethereum, a proper Solana, sorry, ETF, I think you're going to see Solana having a nice kind of
Interesting.
I would say winter.
Yeah.
Ripple, on the other hand, has this kind of, as you say, has this massive retail allocation capacity. At the same time, there is a function of, buying something which is worth $3 with the concept of owning something whole. People are very much attached to the concept of I want to own one piece of something.
Yeah.
And very early on, you saw it happening already in Bitcoin, when people were like, "Oh, I can't buy a full Bitcoin, but I can buy a full Ethereum or a full Ripple." And so you get this kind of factor effect where in the retail mindset, something which has a smaller trading increment, even if you can devise Ripple or devise Ethereum or devise Solana to n degree, but the concept of owning one unit as a thing is very appealing as well.
Yeah, I think it's going to go with market momentum because I feel like Bitcoin obviously has market momentum in the sense of just awareness. ETH, to a certain extent, if Tom Lee had not done the digital asset treasury, I'm not sure we would have seen a lot of new retail coming in. I mean, we have millions of viewers that watch this show, and they're coming into crypto for the first time, and they're looking for really the stuff that's really momentum. ETH has been part of that. Solana is quite a bit lower in terms on the momentum scale. It's a big momentum with the crypto curious, but once you get into new investors, it's usually outside maybe the top five in terms of if they could just list a token that they wanted to be involved with. XRP, a little different just because of its exposure and the amount of holders in the United States that are just regular retail.
Hmm.
That one is one that I continue to watch as being a potential for it. So it'll be interesting to see how these perform. Let's talk about the idea of where you think this market overall. Obviously, we're seeing a rush right now to the ETF products. We're going to see a rush now with the, I think, new products that are going to be offered, whether it's at banks, even businesses that are going to start layering this into their loyalty program. And this is all going to come from the market structure bill that will pass here soon. What do you think this market looks like next year this time?
I think it looks a very different market. If we don't have an accident along the line, like crypto has always been very accustomed to create an accident
Yeah,
along the line because some of the business were not structured the right way. But save for an accident, I think the market will look very, very different with like things trading at a much higher price than they are right now. I think what you're seeing is like allocation being able to open up. What the DAT allowed effectively is the mutual fund starting to allocate as well. A lot of people can't allocate to ETF. The fact that you all of a sudden get another type of vehicle to allocate kind of unlock new pocket of liquidity. And this new pocket of liquidity are true in the US, they're true in Europe, they're true in Asia. And that's before we even talk about how do you cross sell into mainland China. So there is plenty of different new markets which are not even touching crypto
yeah.
or not touching into an investable
Hmm.
framework, which are coming online as we speak. The US are clearly the kind of headwind catalyst for the tailwind catalyst for everything which is happening right now in crypto. But it has a rippling effect across the world, and 50% of the AUM is still based in the US. But like there's still 50% to go search out there. So even if the catalysts happen to be in the US, you have much more allocation. I'll give you an example. In Europe, you can't allocate. We're doing crypto for 10 years in Europe, but you still can't allocate into the equivalent of a
Exactly.
401k. So it's kind of like the difference between Europe and the US, and that's what people need to realize in terms of like what is the marginal dollar coming into crypto. Despite the fact it's open for 10 years in Europe, you can still not allocate to a private bank.
Hmm.
9 out of 10 private bank will tell you no in Europe, while in the US, on an execution based economy, everybody will tell you yes because the giant of distribution have already put that on the platform, and it's available on Fidelity, it's available on Schwab, it's available on iShare and all this kind of framework. So as a result, the market penetration in the US has been much faster because the distribution network were in place, whereby in Europe or in Asia as well, where the relationship to money is much more intermediated, where people
Yeah.
are not directly trading like you mentioned that earlier, that the American investor are much more in control and making the decision themselves. There is always someone driving this fiduciary duty as an intermediary in Europe. And so all these people are kind of like guarding the temple, while in the US, you making your allocation and you driving your decision. And so you end up with this massively growing market. And now, I used to say like don't short the US, because once they're going to decide to catch up on cryptos, they're going to catch up very quickly,
Yeah.
and that's what's happened. And now Europe, which was kind of like at the I would say at the forefront of the pack with their mid-cap bill and everything, well, all of a sudden they're just at the back because the US kind of like started the engine, and they just started the engine. We're not even the US not even starting to walk or run. It's kind of like basically the first inning of the game.
Well, and I think the key here will be how banks, if you look at it, the market for a year from now, our prediction is that banks will become much more active. Now, whether or not they will be as fluid in the crypto markets, if you look at Fidelity right now, you can buy Bitcoin and ETH in a Fidelity account. You can't move it in, you can't move it out, but you can buy it and sell it there and hold it. So we may see that in the banking side quickly. And if you look at the amount of new we just go off of the data that comes in on our channels
Mhm.
and our media. The amount of new viewers, first time crypto, is unbelievable right now. I think our channel might have had its highest viewership in the last 30 days than it's had in the last 5 years. So the market is clearly ready and retail is now here. Do you think the banks will have a role in this that could impact companies like CoinShares and many of the investment groups that are looking
Yeah.
at ETF products, et cetera?
Look, without a doubt, the bank are controlling a lot of the distribution canal in the US, because they control or they control the the trading environment of a lot
Yeah,
of investors. Not every, so you have a lot of intermediation happening still in traditional finance allocation process. And so the bank coming, I would say, online, for sake of a better word, or in the game of crypto in a better way, will definitely help franchise like CoinShares and others. There is no doubt about that. What you see, and CoinShares has been working with many, many banks over the years, especially in
mhm,
the US. And what we tend to see is a lot of them were getting almost ready to do something. Effectively, at some point, get a letter or two from the SEC or any other regulatory oversight jurisdiction they were under, and as a result, put the plan on pause and buries them very deeply. And all these plans are now coming back, and coming back quickly, especially on the back of all the stablecoin bill, because now they're all looking at, okay, cross-border payment and all this kind of solution, which are kind of like one of the big business the banks are doing. So they're not looking at it just from an investability point of view. They're also looking at it from, okay, how do we service the value chain? How do we service the entire vertical? If you look at which bank would have serviced an IPO last year, and Conchi has been speaking to banks in the US for probably 24 months
right.
when it comes to IPO. Uh, the banks who will be looking to do IPO servicing 24 months ago, if you were not a big name like Coinbase, you were
Mhm,
not touching anything. And so right now, look at the latest filing from Galaxy. I think there was 16 different banks acting
exactly.
in different ways. So now everybody wants to get the name attached to it, because it's a time. And even CoinShare, if you look at the banks which are working with us today on the process, which are public information, when you see franchises like Stifel or KBW starting to, which are specialized in fig business, starting to just make a move in that direction, you say, okay, stuff are very differently changing. We're not just at the forefront of the most, I would say, risk taker bank. Like you see Cantor, you understand why Cantor is there, that they kind of bread and butter. But you see bank like Stifel and KBW, say, okay, everybody in the value chain or a different part of the funnel is trying to just realize that there is something to happen. And so, for fast forward that discussion in 18 months, I think you have banking services integrating crypto. I think you have investment in 401k integrating crypto properly.
Mhm.
All this kind of stuff is happening in front of us, but it's being turbocharged effectively.
Yeah, for sure. Well, and I think, now we're getting into the target opportunity in terms of the addressable market. There's research out there now suggesting that with regulatory clarity, which is going to unlock here in a few months, if not the next couple of months, that we could see as much as 4 trillion in institutional capital coming into digital assets. When you look at that kind of market size, realistically, what do you feel that you guys could capture? Not
I'm
like,
gonna I'm gonna just rewind a little bit here because there's a 4 trillion. People say, oh, 4 trillion, that's about the market cap of crypto. Is that crazy? And so if you look at I would say at the top down approach, there is
yeah.
134, $136 trillion of AUM in the
Hmm.
world. 50% of this AUM is in the US. And at the end of 2024, there's only 10 basis points of this AUM, which is allocated for the purpose of ETF allocation in crypto. So 10 basis points. We're not talking about massive points. We're talking in
Right.
basis points. You go from there and you look at the last EY survey where they survey 1,000 fund manager with more than a billion. Fund manager with more than $1 billion of AUM. The key takeaway is like 85% of them want to allocate to crypto. 60% of them want to allocate at least 5% of the NAV to crypto,
Ooh,
and they want to allocate through the ETF market because they're not going to reinvent the entire target operation model for 5% of the NAV and have a
yeah.
complete different upstream. And then you say, okay, so that's interesting because it's 5% here. We have 10 basis points right now. Assuming 50% of that is just the US, so it's like 5 basis points is in the US, which is not. It's just like to make some rounding error math.
Hmm.
Uh, the margin of progression between 5 basis points and 5%, and that's before you talk to Redalio, who tell you it's 14%,
Right.
is kind of like in terms of portfolio allocation is there. So I would say the margin of progression is phenomenal. We're not talking about a market who can grow by a 2x or 3x. You're talking about a market who can grow by between 50 and 100x effectively, depending
Whoa.
where you put your in terms of allocation in terms of people portfolio, because the penetration rate of this portfolio has gone nowhere. So the real question is like how this kind of value added of crypto promises is starting to effectively trickle down in every single portfolio, not just the kind of people who are in the known, but the wider people. And
Yeah.
that's the virtue of crypto. Is like for once, institution didn't allocate first, retail allocated
Hmm.
first, and that's why the entire world is upside down about crypto because normally the regulator gets the pressure from the big institution to tell them we should regulate that stuff because we're going to distribute it to retail, and that's worked this way because they already did their homework and the regulator kind of support what they hear. In
So
that
you
sense,
think
the
so,
retail get allocation first.
yeah, you think some of the reports then and a lot of the analysis that are expecting anywhere between 25 and 30 trillion by 2030, and this is in reference to ETF AUM, because right now we've seen what, almost 2 trillion in inflows in 2024, what we've
Mhm.
seen this year doubling. What percentage of growth? So you think that is way undervalued of where the market could really go?
I think you can see people globally allocating 4 to 5% of global AUM to crypto.
Wow.
Uh, and so it's kind of, but at the same time, we come from a commodity background, and when commodity was starting to be discovered and Goldman created the GSCI index, there was this whole kind of narrative around you need to put 4% of your exposure into commodity, and everybody was laughing. And by the end of the decade, everybody was wanting 10%. And it was the same thing with private credit or private investment when the recommendation came out saying you need to get some private credit, private investment in your portfolio. Nobody was doing it. And last year, BlackRock by HPS. And so the kind of, what we tend to see is like this allocation overswing over time because people kind of like run after it. And so you always get more people coming into it. So I
Yeah.
think you're very, very, very much right now at the start of the process. You didn't see at all the kind of full power of allocation coming up. We always talk about Duke endowment or Harvard endowment having some allocation, or we look about the Ontario teacher pension fund having some allocation long days ago. But it's just like kind of like single points. We're not talking about a general movement inside
Right.
endowment to allocate to crypto. When it comes to pension fund, same thing in Europe. European pension fund has zero allocation to crypto, save for one or two. So we always talk. We always confuse discrete win, which some of our competitor or ourselves kind of manage to bring to crypto, and as people say, to orange pill, and take that for generality.
Yeah,
And so before Larry was talking on CNBC about the value of Bitcoin, but it's not the representation of the entire industry. And so there's
exactly.
plenty of more people to kind of come on the journey. So we're just at the starting point.
Yeah, and I think also you have to look at retail versus the institutional side of things because right now it's right the crypto investor portfolios, at least from the research we've done, is anywhere between 28 and 30% now are allocated to Bitcoin. And now you look at, which means that we're talking about 70% that are allocating to other digital assets. I'm talking about just the crypto portfolios themselves. So with all these ETF products, it really opens up that. Do you think the amount of Bitcoin allocation will increase in just the crypto bucket for investors, or do you think it will decrease as more products come onto the market?
So just first to come back on the stats you mentioned, just a complementary stat. The FCA in the UK just released some number because if you remember, they banned the ETF in
Right.
2021 or in 2020, sorry. And when they banned it, the study was saying that 4% of the market were having access to crypto in general in the UK. And
Mhm.
now they're quoting 12. So you can see, despite the ban, you have some market
There was
penetration
growth. Yeah.
happening, but we're still talking about 12%. It's kind of like, not talking about massive, effectively, adoption. So that's one point to come back. Now, when it comes to to the real question, which was, how do we see that? When we look at it at CoinShare, we look at crypto and Bitcoin specifically as the entry point. So people tend to enter the crypto narrative through Bitcoin. And because that's the stuff they can understand, there
Yep.
is a clear investment thesis that CoinShare elaborate on, which is about you know, the finite supply, the anti-monetary, I would say, debasement trade, and that you need to get that in your portfolio for many, many reasons. And people start there, and then from that point onward, people say, okay, I get this exposure. What else can I explore in? And then, depending on the volatility of Bitcoin at that point, they start to rebalance either from crypto or to a new dollar. So, depending on where people are in their allocation cycle, you're going to see other people rotating out of Bitcoin because they feel they have some gain and they want to reallocate some of this
Exactly.
gain. And you can see this cycling happening in crypto full stop, where you can see Bitcoin rallying and then people rotating out into altcoin.
Yep.
And I think you're going to see the same thing in the ETF space, where people are going to start allocating to Bitcoin, get themselves comfortable, and say, okay, now there's this stuff called Ethereum, which is much more like a tech stock, which has a yield embedded to it. So there's an income factor attached to it. Okay, that's interesting. How do I allocate a portion of that? So depending on what kind of, are they still contributing to the retirement plan, or are they just like managing effectively a retirement plan? Different kind of stage in life. They're going to either start to allocate new net money into different pockets or start to rotate profit into something else.
Yeah, I'm just looking at the dominance chart here to give some frame of what you're talking about because this is Bitcoin dominance right here. It's on the daily, and you can kind of see really from its top, which was back here around June, to where we are right now, down around 58%. So I would say that that's validating what your point is there, Jean-Marie, in terms of this rotation. I'm just wondering if the rotation is a little early, if in fact we start to see market structure open up the eyes of a lot of new investors. To your point, if new investors are coming in and their first entry is Bitcoin, you would think that that market would help resurrect that. And back to Tom Lee's target, I think, of Bitcoin hitting 200,000 by the end of this year, the
Mm-hmm.
2025. It seems like we would start to see market dominance edging up, even though it has been edging up over the last few weeks.
I think what you need to keep in mind, or you or anyone actually, is like this cycle is like nothing else we saw
Exactly.
before. If you talk about you know 2016, 2017 cycle, or even 2013 cycle, and then 2021, all this cycle have some kind of similarity, but they're all sharing one common point, which is they are fighting against the system.
Yep.
And so it was us, because we were part of the crypto people, it was us against the rest of the world. And and CoinShare was kind of like this company who was fighting to some degree some regulatory pressure to make sure we can deliver this product to the market back in the day. And all of a sudden we fast forward to this new cycle, and now you go from total you talk goes like effectively trying to run a business against massive amount of tailwind, against running a business against massive amount of a headwind against a massive amount of tailwind this time. And so this is condition crypto I've never known before. Crypto has been built in against chaos. Crypto has been built against opposition and against effectively how many times did you read Bitcoin was dead effectively.
Yep.
And so this is the very, very first time we are running this story where we have a pro crypto administration in the US. We have a significant tailwind across the world, and every single regulator is pushing in the right direction. Some slower than others, but they kind of like almost obliged to keep moving because the SEC has been moving. The amount of time we have sit down with regulator in Asia saying us, "Oh, we're not going to do anything until the SEC do something." Everybody in the world was waiting for the SEC to make a move. As usual, the US are making the decision and the world is watching. And so what is very interesting here is like the American dominance is being reaffirmed. There is a strong driver and dominance being driven by the US administration on that thematic. And there's also a willingness to reappropriate dominance in crypto. Most of the great innovation has been done through American company, and
Yeah.
we can see with the quality of the listing which are coming right now in the US. And CoinShares listing in the US is also kind of a testament to the fact that the US market remains the dominant market in the world.
Yeah, for sure. Listen, I think the key here is we're in a new era. We've got a lot of new companies now starting to hit the market. I think this next 6 months is going to be very heated in terms of just news and how the market is going to be dealing with this. The real question is how does the U.S. economy kind of right the ship, especially on the jobs numbers, which have continued to be a kind of a sore spot, I think, for the Fed, which is going to roll out, continued cuts throughout the end of the year. So it's going to be something we're going to watch. Jean-Marie, we'll definitely get you back on the show to see when CoinShares is out there and how you guys are doing. And thanks so much for coming in today. We appreciate it.
Thank you for having me, Paul.
You bet.